Sheldon, thank you very much for joining us today. How are things in Toronto?
They're fantastic. Thanks, Jimmy. Really nice to be here.
So you are the new CEO of Triple Flag Precious Metals, and for those who might not be familiar with you, tell us a little bit about your background.
Yeah, thanks, Jimmy. I was actually one of the three founding members of Triple Flag. I joined Sean back in 2016. We didn't have an office, we didn't have a portfolio. We really just were a clean sheet of paper. And what we really wanted to do was we wanted to assemble a portfolio of streams and royalties that really looked a lot like what the leading streaming and royalty companies at the time had, which was Franco Nevada and Wheaton Precious really were our template. I started with Sean then, and we built out the portfolio asset by asset. I was there for Sara Lindo, our first investment in 2016. And initially, I was the general counsel. I had a legal role. And then I moved into the chief financial officer seat in 2019. In 2021, I was the CFO when we IPO'd on the Toronto Stock Exchange. So that was really a real highlight of my career and my time at Triple Flag as well. The next year, we listed on the New York Stock Exchange, and we've just been growing the company ever since. So while I'm new to the role, I'm certainly not new to Triple Flag.
That's good to hear. So you know the company intimately, and we're going to discuss some of your assets now. And Triple Flag has 235 assets, 30 of which are producing, and the largest asset is North Parks, represents 25% of your net asset value. It's a large copper gold mine located in Australia. Why don't you tell us about this asset and give us a brief update on what's happening there?
I look at the streaming and royalty sector. The reason we were interested in it, it has very good risk reward characteristics and risk and return characteristics. You get that top line exposure where you get full exposure to the increase in the gold price, but on the downside, you're just in a much safer position than the equities, which often get hit by dilution, capex expansion, opex expansion. And when you think of like the ideal sort of streaming and royalty asset, I would say it really looks a lot like North Parks. North Parks is, first of all, located in Australia. So if you're going to have 25% of your NAV in any one asset, Australia, I think, is the best place in the world to have that. It's a copper gold asset, so it's primarily a copper mine. And we actually stream the gold and silver out of that. So it's a byproduct. So it means we're not competing with the operator for their primary product. And we were able to offer them good terms, but we really can benefit from the gold and silver production there. The other attribute that's really important about it is it's been in operation for over 30 years. Initially, it was a Rio Tinto asset, then it was CMOC that ran it, and just over a year ago was acquired by a group called Evolution Mining, a very successful mining company based in Australia. North Parks is right in its backyard, and they're just motivated to explore the property. And when I look at that property, I see tremendous exploration potential. And that's what's really drives some of the outsized returns we see in the streaming and royalty sector. It's when you underwrite a certain mine life and a certain amount of gold and silver going to be delivered to you over the course of the contract. And the company expands and extends that mine life. The streaming and royalty company really benefits. The entire footprint of that mine is only 26 square kilometers, but under our contract, we benefit from over 1,000 square kilometers. Evolution is very motivated to explore this property, and I'm really excited about what it has to bring in the future.
So one question about the mine life. You said it was 30 years. Is that correct?
Yes.
So one of the things I really enjoy about copper mines is that they can have very long mine lives, unlike a gold, which might be 8, 10, 12 years. But a copper mine can be 25, 50, 75 years. And when you speak to the guys on the ground there, what's the best case scenario? How long can this thing go?
Yeah, it's really interesting. So the mine's been in operation for 30 years. We have about 30 years of mine life right now that we can point to. But when you talk to people on the ground there, they actually say this could be a 100-year mine. It's just underexplored. There's lots of resource there that hasn't been brought into the mine plan yet because the mining company isn't motivated to spend the money to bring those years beyond 30 years into the mine plan because it's just so far off into the future. But we know the mineralization is there. It's quite exciting, and I really am glad you picked up on the point of the advantage of having a gold stream on a copper mine. It's commonly said that the best gold mine is actually the gold coming out of a copper mine.
And the current mine plan at North Parks, it's focused on 5 deposits. Maybe you can just speak to these deposits and which ones will be driving future growth.
Yeah, it's what's really nice about North Parks is they have multiple ore sources, and you correctly flagged that there's a number of different deposits. And so those primarily it's an underground block cave. system. There's also some very nice high gold grade pits on the surface. Now, remembering that this is a copper mine primarily, so the operator is going where the copper is, and the gold just comes along for the ride, so to speak, and we get the benefit of that. And so from time to time, they will go into areas that have much higher gold grades, and we actually really benefit from that. So in 2024, we're actually going to see about twice as much gold delivery from North Parks as we received in 2023. And that's primarily a result of just higher gold grades have been realizing from some of these nice open pits that are on surface. They're not going to last forever, but we've benefited in 24. We're going to benefit into 25 as well. But the exciting story going even longer term is they're extending out the E48 sublevel cave. So that's a large cave, and Evolution's like took fresh eyes and a look at the mine plan, and they found some areas that actually have very attractive gold grades for us, and they can extend the duration of the E48 sublevel block cave. And they're going to be working that starting in the back end of 25 and going forward there. So we're going to see some nice gold deliveries for many years to come from North Parks.
And you made mention of the fact that in some of the deposits there was much higher grades. And I noticed in your marketing deck, I believe it was E31, the open pit had grades of as low as 0.13 in 2023. It got as high as 0.34 grams in 2024. Is this a trend we can expect, or is there going to be some level of normalization here?
Those grades that you saw in our deck there are actually the blended grades from the mine as a whole. So it reflects some of E31, some of E48, some of E22. So all the various different ore sources. But those high gold grade pits on surface, the E31, are what raised that average that you saw there. And that's what really drove those higher deliveries we had in 2024. We're going to see those continue into 2025. And then what's going to be taking the place of those high gold grade open pits, the E31, is going to be the E48 coming online again with higher gold grades than we've been experiencing in the past. I don't see us ever going back to the 0.13 grams per ton. It's going to normalize, somewhat around where we are right now, and have really nice profile going forward.
And we mentioned this at the onset, but North Parks represents the largest asset in your portfolio, 25% of NAV. And this is a lot of exposure to one asset. And maybe you can just expand on this, but do you think there's additional risk here, or are you happy operating in the country of Australia? Do you see any sort of risks associated with such a large asset?
Yeah, if I had to pick any one asset to have 25% of my NAV be, it would be North Parks. First of all, it's located in Australia. I mean, that is, I think, the as good a mining jurisdiction as there is to operate in. Second, as I touched on, it's had over 30 years of operating history already. I was down at site. It's in a really nice area of New South Wales, primarily agricultural. The operator actually owns the surface rights all around there. It's just well-established part of the mining community. We actually make contributions to the local community to fund some of their social programs, just to try to give back to the community that we're benefiting from. But this is an area that's just mining is very well accepted. The local workforce lives in the local towns. It's an area that you'd be happy to have your family be raised. I think it's actually probably as low a risk mine site as there is to be involved in. If I could do another North Parks again tomorrow, I would do it in a heartbeat.
Sheldon, Sara Lindo is another large asset within your portfolio. It represents 7% of NAV, and it's a large zinc, lead, copper mine in Peru. Can you give us an update on this asset and how it's performing?
Sara Lindo is actually our very first asset. We acquired it in 2016. We invested $250 million, and as of the end of last quarter, we'd actually realized over $300 million of cash flow. When we underwrote Sara Lindo, we were actually expecting it to last 8 or 9 years. That was our underwritten case. And right now we're 8 or 9 years, we're 8 years into that, so it should be running out next year. But instead, our view right now is we have 8 or 9 years ahead of us still. So it's one of those wonderful sort of mines that they tend to explore as they go along and extend out the mine life. Sara Lindo actually had one of its strongest years ever this past year in 2024. I'm looking forward to a really strong 2025 from them as well. They're benefiting from strong zinc markets and also the silver grades, which we have a silver stream on that mine. the silver grades are actually quite strong as well.
In late 2024, you announced a couple of new streams with Allied Gold. And for those who might not know, Allied Gold is the new gold company of Peter Maroney, the former CEO of Yamana. Maybe you can just give us an update on what's happening there in these two streams that you signed.
Yeah, thank you. Quite excited to enter in this deal with the Allied Gold team. As you alluded to, Peter Morone founded Yamana, very successful story in the gold space, and now he's doing it again with Allied Gold. We actually entered into a $53 million gold stream on two properties in Cote d'Ivoire. That's in West Africa. It's Agbao and Bonacro are the two assets there. Very nice gold streams, two operating mines. They've been established for quite some time. Good history there, and there's a lot of upside potential on these mines, which is really exciting for us. The property is underexplored. Allied's going to put money into exploration. We were able to transact at attractive rates of return, and we're just quite pleased to be involved with the Allied Gold story.
Sheldon and I want to have a conversation now on optionality. And Triple Flag has 43 assets in various stages of development. And one of the elements that makes the whole royalty model very attractive in my mind is this concept of optionality. And for a very small investment, you can make very large rewards. Is there one or two assets in your portfolio where you see this happening, where you can really gain from optionality?
Yeah, the optionality is crucial to the streaming and royalty model. It's when we underwrite a certain mine life and it gets extended, and we actually benefit as our operators spend money on exploration and development and expansion, and that's just central to our model. So I could look at the whole portfolio and point to countless examples, but you've asked for two, so I'm going to answer the question and give you two. And I'm going to take opposite ends of the spectrum, one a very small development and one a very large operating asset, because I think they're both very instructive. So on the development side, we actually entered into a royalty back in 2017, and we got a royalty on Newfound Gold's Queensway project. Very exciting project. It's based in Newfoundland. That company is drilling out a deposit with very high gold grades, and we're quite excited what that's going to bear in the future. We paid less than $25,000 for that royalty, so not very much money at all. I wouldn't part with it for that, obviously. I wouldn't part with it for multiples of that. So there's like the potential for outsized returns. And again, that's from early exploration stage, benefiting from the drill bit and the drill bits being funded by our partner. The other example is actually going to be North Parks, which is our largest asset, producing strong cash flow producer. But the optionality on that project is immense. The entire mine site right now is less than 26 square kilometers, but we benefit from over 1,000 square kilometers. And there's multiple targets on that property. When CMOC owned the property, they didn't explore it to the same extent that a number of Western companies would. Evolution Mining is now the operator, and they are very focused on exploration and building out that portfolio. So we've already seen improvements in the mine plan that benefit us, and we're looking forward to more to come.
I can't believe you picked up that asset for $25,000.
Yeah, those are nice assets to have, and there's about 200 assets in our portfolio right now that are not cash flowing. And as you get exposure to multiple ones, it increases your odds. So there's others in the portfolio as well that are just, people are drilling on them, and if they hit something good, we're going to benefit, and our
Well,
shareholders get exposure to that as well.
yes, it's going to be interesting to see if and when I have a discussion with you 5 or 10 years down the road and to see what's happening at Newfound Gold and what that asset is worth.
It's instructive that you say like in 5 years, because in the streaming royalty sector, time is your friend. As time goes on, you tend to get positive surprises, and I think that's what makes it such an attractive model for shareholders.
So let's talk about your balance sheet now and also capital allocation. And how are you going to allocate capital in the coming year? Are you going to focus on buybacks, dividends, or acquisitions?
Yeah, primarily I view ourselves as capital allocators. We don't actually run the mine, so it's our job to allocate capital to the benefit of shareholders. And when we started Triple Flag, we had a clean sheet. We didn't have a portfolio. We didn't start with any royalties. So the entire portfolio that we have today, it's been built by this management team, and I think reflective of our capital allocation track record. Our capital allocation philosophy is very simple and straightforward. First, we pay a dividend. Currently, we pay 22 cents a share annually. When we went public, that was 19 cents a share. So that's a 15% increase over the course of the 3 years. We've increased our dividend every year since we've gone public. I look to continue that track record going forward indefinitely. Second, we have robust cash flows, and we're going to use those to invest in more streams and royalties for the benefit of our shareholders. And I think I'm just going to pause here with the robust cash flows because last quarter we did over 60 million in operating cash flow. That's significant. On an annualized basis, that's over 240 million. Our dividend accounts for about 45 million, so that leaves us with nearly 200 million dollars a year to make new investments for the benefit of shareholders without drawing down debt, without issuing any equity. It's just a great model for building wealth over time. And then the last element of the capital allocation is share buybacks. I think the mining sector as a whole has been plagued by too much dilution, which really impacts shareholder returns. What I really care about are per share metrics. I care about operating cash flow per share. I care about net asset value per share. And so anytime I get the chance to reduce the denominator and remove some shares from circulation, that actually adds to the wealth available for all the other shareholders that remain. Since we started our NCIB in 2021, we've actually taken out over 2.2 million shares from circulation.
Sheldon, I want to get your thoughts on consolidation now. This has been a big theme within the mining sector overall, not only in the royalty space, but also in the mining space. And in 2023, Triple Flag acquired Mavericks. And also in 2023, we saw Newmont acquire Newcrest. Do you think this is going to be a theme that we will see in 2025?
I think consolidation makes a lot of sense in the streaming and royalty sector and probably in the mining sector as a whole going forward. You alluded to our acquisition of Mavericks Metals in 2023. That was a fantastic acquisition for us and really benefited our shareholders. We were really pleased. What we really cared about was we wanted to make sure we could do an acquisition at a price that made sense for our shareholders. That was cash flow per share accretive. It was also NAV per share accretive. And we picked up a very nice portfolio of assets that had been acquired by the Mavericks team over the course of their history. When I look back right now, and so we're now about 20 months after that acquisition closed, and I do that acquisition again in a heartbeat. There's a number of assets in that portfolio that have just outperformed the expectations, including we acquired a royalty on the Kensington mine operated by Coeur. We've had very good news flow on the Koné mine operated by Montage Gold. They have gotten through permitting. They brought in investors and a large financing package. The SK Creek mine has had a really large financing package. We hold a royalty on that. The Hope Bay property has had very good drilling results in the past year. And again, we hold a royalty on that. So I would do that acquisition again in a heartbeat. And if there's further opportunities for such consolidation, we'd definitely be interested in taking a look. It's just we'd have to do so at a price that made sense for our shareholders.
Sheldon, you and your team have been on the road for many months in 2024, attending conferences, meeting with institutional investors. I'm curious what you're hearing. What are they saying about the gold sector overall?
Yeah, I think the underlying theme is just confidence in the gold outlook going forward and the feeling that it's not yet too exuberant and it's also the early innings. And those, of course, go together. Gold's had a tremendous run in 2024, but I think gold has been out of so many portfolios for such a long period of time. I think the catch-up trade is going to be longer and higher than people anticipate right now. I was on the road, gold dropped $100 after the US elections. I was on the road talking to investors that day. I was kind of curious as to what their reaction would be. And this included like generalist investors, not your traditional gold investors, and whether there's a sense of lack of confidence. And it was actually to the opposite. There was a sense that, there's always corrections in an upward trend, that was just one of them. Since then, we've seen the gold price actually respond quite well. There's a feeling that macroeconomic events are going to provide a real tailwind to gold. The central bank buying is probably not a story that has run its course, and the interest rate cuts are still forecast for the future, which of course help the gold story. So I would say the big theme is real confidence in the gold price and the gold outlook from generalist investors, not just the traditional gold investors.
So there's still hope.
Oh, I think there's a lot of hope. I think it's beyond hope. I think it's confidence.
Well, that was a great discussion, Sheldon, and I want to thank you very much for spending time with us today. What can investors expect in terms of news flow as we go forward in 2025?
Yeah, thanks, Jimmy. Triple Flag, the story is really working for Triple Flag, and I think we're really executing the way we should. The streaming royalty model is a fantastic model, and we're not exposed to the operating cost inflation or the capital cost inflation. And so, if I look back to 24, record production, record cash flow, record gold prices. As look forward in 2025, we're going to benefit from our higher production levels. We're also going to benefit from the higher gold price because the price of gold went up continually over 2024. So we're going to see really nice news flow out of that. I'm looking forward to releasing our annual results in February of this year. And then the other positive news flow that I'm expecting over the course of the next year and beyond is just the continued progress on some of the projects that we have interest in that are in development. And I mentioned, the Kone project that Montage Gold is building, SK Creek that Skeena Gold is building. Beta Hunt is doing some fantastic things with their mine in Western Australia. So I think we're going to have some really nice news flow from our properties as well.
Well, that's a great overview, and I want to thank you very much.
Thank you, Jimmy. Real pleasure to speak with you.